socialism doesn't work, even semi or pseudo socialism doesn't work, and leads to big trouble for the people.
Hi, everybody. This is Sean Ring, the editor of The Rude Awakening. Welcome back to Paradigm Press's YouTube channel. And thank you so much for all of your subscriptions and views so far. We are overwhelmed by your generosity with your time. Today, I have my good friend, economist, and best-selling author, Thorsten Polleit. He is the author of The Global Currency Plot, which is currently sitting at number 18 in the Kindle store in international finance. But mainly, we're going to talk about Germany, America, and gold and what's going on in the world right now, which is quite nuts. So, Thorsten, thank you very much for taking the time.
Sean, the pleasure is entirely on my side. Thank you very much for the invitation. It's always great talking to you.
Oh, well, brilliant. And for me, I learned so much every time I talk to you. But let's start off a little bit lightly. I was, and this is only a little bit lightly. My good buddy from high school sent me a message on Twitter this morning and said, you won't be able to believe this, but in Germany, and I'm going to pick on Germany a little because you are German, and it's good to have an inside view. There's a school named after Anne Frank that they have just decided to change its name for the spirit of diversity and inclusion. And to me, it's just a microcosm of what's going on in Germany and what I think is clear that's going on in America right now. Has pathological altruism kind of wrecked Germany? Is Merkel's, 2 million, come on into Germany really, injured the country as much as I quite frankly think it has? Am I going nuts? What's going on?
That's a great question, Sean. And I think we have to be aware that there's a mind virus that's going global. It's affecting the US, it's affecting Europe, it's affecting Germany. We talked about it earlier. It's this wokeism that is confusing to many people. It causes a lot of craziness around the world, and I think that has to be attacked and has to be defeated. It's very important to get rid of this evil mind virus that is causing so much trouble around the world, not only in Germany, but the example you just mentioned is clearly a very good illustration how crazy people have become lately.
And funnily enough, we now see this deindustrialization of Germany going on. Again, you're on top of this far more than I am. Is that real? Is Germany really deindustrializing?
Yeah, Sean, a very important question, not only for Germany, but also for the rest of Europe, even for the world, because Germany is still the world's third largest economy. If you agree, let me just add some more thoughts about the immigration issue. As an economist, when I look at the immigration problems around the world, what comes to my mind is the idea of the Great Reset, of installing a single world government or a centralized political decision-making body, be it the UN, be it a new elite, a technocratic elite, whatever you may call it, and to realize this plan, as suggested by the Great Reset or the New World Order, you have to overcome the nation state. The nation state we were talking about is actually the main obstacle in the way of building up, of erecting a single world government. And how can we get rid of the nation state, or how will these proponents of the Great Reset think about getting rid of the nation state? One strategy is immigration, uncontrolled immigration, thereby de-homogenize the nation state, making people disenchanted with their own tradition, their own values, and discouraging people from adhering to the idea of having a nation state. And this is actually the way that basically opens up the opportunity for the Great Resetters to get their way, to finally establish a single world government. And in Europe, we have gone pretty far on a small scale, admittedly. But as you know, the euro was introduced as a single currency in 1999. And many countries, participating countries, basically gave away their national sovereignty regarding many issues onto a supranational level. And when we talk about the Great Reset, Sean, of course, deindustrialization is also part of the story. Germany is an industrial power country, has been an industrial power country for many, many years. And now the Great Reset agenda foresees the ending of the fossil fuel driven production system. And that comes with increases in energy costs, that comes with an increase in regulation. And to cut a long story short, the effects can already be seen in Germany. For instance, industrial output has dropped by around about 12% since its record level back in 2017. And yes, I think you can rightly say deindustrialization, capital outflows out of Germany, this is underway, and I think it's politically orchestrated. It's not a natural development.
Yeah, this is something that Martin Armstrong originally came up with, and I kind of agree with him. I think one of my predictions was, the nation state is going to kind of break down, and part of that'll be via crypto, not necessarily because of Bitcoin itself. I'm not a maximalist or anything like that, but the technology almost obviates the need for a nation state to issue currency. And we're going to get into gold in a bit because I know you're one of the world's best gold experts. But do you think that Germany will still be a viable country by 2030? Do you think perhaps maybe Bavaria or Westphalia or any of those regions are going to just go, I've had enough, I'm going to break away. Can I have my own little country?
Well, I think if current policies continue as they have been continuing in the past few years, I think Germany is heading towards a kind of Argentina scenario where output keeps declining, the economy is in demise, and also GDP per capita will drop significantly. Again, this is under the status quo, the trajectory of current policies. Of course, there's a more optimistic scenario. I think, of course, there's a chance of changing the current policy course, returning to common sense, to abandon the policies that restrict production and economic growth, and return basically to a favorable economic expansion trend in the coming years. However, the probability of such a scenario to unfold is not very high at the moment, I have to say. The most likely scenario is, I think, that things will become worse, and at some point, I think they will become so problematic that people won't have any other opportunity rather than to adopt common sense again, to make sensible decisions, to change their government policies, and to return to an economic policy that is decent, that provides people with an increase in material welfare. And I think we can only hope that there will be such a change in trend in the coming years. But it's certainly that I think it's certain that Europe will fall back as far as prosperous regions in the world are concerned.
Yeah, it seems like that. And it's funny, if we go back to the old saying that America is nothing but a bunch of English-speaking Germans, which I love that saying. There seems to me to be just a bunch of similarities between, German and European policy and American, specifically Democrat policy. What can Americans learn from what's going on in Germany right now? And is it going to be the vote that matters? I mean, what advice would you give the normal American right now?
What I would call out loud, Sean, that socialism doesn't work. Even or pseudo-socialism doesn't work and leads to big trouble for the people affected by socialism or pseudo-socialism. And that is actually the economic policy in Europe. No one calls it that way, but this is a form of socialism where the governments becomes increasingly powerful, intervening in all sorts of things in the economic system, in social policy. The government actually gets a dominant role in education, be that kindergarten, school, universities. Also, when it comes to old age retirement schemes, or health, or money and credit, and law and security, and lately climate. And this is certainly the wrong way. We know as economists that socialism leads to destruction. And even a little bit of socialism sooner or later becomes full-blown socialism. And I think this is the big lesson the Americans can learn from Europe. The virus of socialism is also already in the US, and increasingly so. And I think it's important to understand where the root cause of all these problems are, namely weak economic expansion, debasing the purchasing power of the currency, namely inflation, growing government debt, people that suffer from declining real incomes. This can all be attributed to the policy of socialism. And the lesson to learn for all the Americans is get away from socialism, abandon this fateful theory, this fateful policy based on socialism.
That's great stuff. Before we turn to our happy subject of gold, your book, The Global Currency Plot, which is absolutely brilliant. Everyone, I highly recommend you read it. It's incredible. You talk about kind of like democratic socialism almost as a Trojan horse. It is pretty much what you were talking about. But yeah, we here at Paradigm Press, we call central bank digital currencies Biden bucks. And it seems to have, I think, and I hope, really influenced a lot of people who probably were not so against CBDCs, kind of like, it's all right, now I don't have to worry about a bank, I'll just get it straight from the central bank. Can you just, as a gold guy and a gold expert, just reiterate your points that you made from your book, and you've said many times about the dangers of Biden bucks or CBDCs as the ultimate step?
Actually, the truth, governments want to control our money. Not to give us good money, but they want to control our money, because if you control the money, you control the people. And when you look at monetary history, governments have replaced commodity money or gold or silver money through their own unbacked fiat currencies. And these fiat currencies suffer from a great deal of economic and ethical deficiencies. They are inflationary, they cause boom and bust. They are socially unjust. They enrich some at the expense of many, and they lead to an over-indebtedness of the economic system and to an aggrandizement of the government. And getting rid of cash is the next step governments have in mind to get totalitarian money. And once that is achieved, we will possibly get a digital central bank digital currencies. And to cut a long story short, I think this is a Trojan horse or a poisoned apple, because these digital central bank currencies can be programmed, they can be combined with a social credit score a la China. And you can actually be made to adhere to whatever the government says. And weighing the pros and cons of central bank digital currencies, I come to the conclusion that it is best that you reject the idea from the start. Don't let this experiment run its course. It's dangerous for the free society, or what little is left of it.
Yes, I think that is a very accurate statement. Unfortunately, what's left of our free society. Well, let's get happy for a second, because you are, to me, one of the world's great gold experts, and we were so close to closing above 2,000 for the first time on the monthly charts, and then whoever it was came in and smacked it down right, about an hour or two before the market closed. But Besides that, I mean, gold's up and away, I think for very good reasons. Obviously, we don't trust the government. We're talking about central bank digital currencies. People are trying to escape into gold. But the miners right now, the gold miners, they don't seem to be buying this story. What do you think needs to happen for the rest of the gold miners to start rallying?
Well, the gold mining business is often not a great business. A gold mining company makes a profit if its revenues exceeds the cost base. And at the moment, as you know, there's inflation around, energy prices go up, labor costs go up, and that is, of course, something that is detrimental to the profit outlook for many mining companies. And so when you look at the mining sector in general, you see that profit developments hasn't been stellar. And and I would also make investors aware it's a completely different thing to buy gold in the form of coins and bars and to buy a mining stock. A mining stock is a company, and if you buy a mining stock, you become an entrepreneur, and you run into entrepreneurial risks, and quite often companies do not make good business decisions, and so they don't up with the stellar profits, and so the stock price is disappointing. And also, when you look at the more recent history, due to higher credit costs, many mining companies have started issuing ever more company stock, and that is, of course, diluting shareholder value. And so it hasn't been a good investment. Looking forward, I'm feeling much more comfortable at the moment buying gold outright rather than investing in mining companies. There might be some mining companies out there that are very promising, have decent valuations, and are attractive investments. But I wouldn't give a recommendation to buy the mining sector as a whole, for instance, via an index.
Right. Okay. So you're not a GDXJ fan. Okay, good. That's great to know. That's a really great tip. I'm going to get back to that in a second. One of the things I did want to ask you, and again, this is one of those am I crazy questions, but we have seen gold bounce its head on the ceiling of $2,000 three times now. Yeah, the old charting thing is there's no such thing as a triple top. It's got to get up there sooner or later. Do you think, one, is it important for the Fed to keep gold below $2,000 to maintain the illusion that it's still got control over things? And if so, what happens when it finally does break through for good? Do you see any fundamental changes there in the way we view our money after $2,000?
Let me start with the good part of the story, Sean. Back in February this year, I participated in the London Bullion Metal Association forecasting exercise, and my estimate for the end of 2023 was $2,200 per ounce for gold. And I haven't changed it yet, and I won't change that. I think this is round about the fair value level, and I'm still quite optimistic that gold will move to this level in the coming weeks, actually, right, or towards the end of this year. You're right. I mean, gold is a kind of canary in a coal mine. In a coal mine, as far as the financial system is concerned, the level of $2,000 per ounce, I think, has a strong signal to financial market. If gold goes beyond that level, it becomes clear, I think, to most investors that something is very, very wrong with the international fiat money system. And I'm unfortunately convinced that indeed the international fiat money system is in deep trouble, and it's just a matter of time that gold goes above the 2,000 level. I have, without providing any empirical evidence at this stage, I have the impression that someone is really trying to prevent gold from going above that level, especially so that bond markets are now starting to pricing in interest rate cuts. As far as the Fed is concerned, as far as the European Central Bank is concerned, lately the Bank of England suggested, well, interest rates are no longer going up. The next move will be down. As soon as people embrace the idea that the interest rate cycle has already turned, that interest rates will go down sharply, maybe as early as in the first quarter of 2024, I think gold will move very strongly upwards. And so I would suggest all investors who think about building up an exposure in gold and silver should take the current levels as a level of opportunity and get invested. All the supporters of gold have to take into account that currently you get 5.4% by buying a one-year US Treasury bills. And that is, of course, a strong competition vis-a-vis holding gold. As you know, if you hold gold, you don't earn an interest coupon, you run into opportunity costs. And the increase in interest rates, I think, to some extent explains why gold hasn't been higher, hasn't moved higher than it actually did. But as I said, if the market embraces the idea that interest rates will be cut sharply, I think that is the point in time when gold will move up very, very strongly.
Yeah, I agree with you. And that's a great point talking about interest rates there. That is absolutely critical, the cost to carry. One thing I did want to ask you about, because this is, I remember when the Shanghai Gold Exchange kind of was founded about 10, 11 years ago, everyone was like, oh, God, gold is going to be priced in China. Watch out. And that gold in Shanghai, it trades only for physical delivery at a premium to gold in the West right now. I think as early as a couple of weeks ago, it was like $110 more expensive in China. Will that lead to a loss of the narrative for the powers that be over here, or the traders here? Are we going to start having to take into account the Chinese gold price, or is that, again, one of those overblown stories about China's overblown power?
No, I think when you look at the demand structure for gold on a global scale, you will realize that India and China account to around about 50% of the global demand for gold. So China in particular is very powerful, and of course, from official data, we see that China tries to build up its gold reserves, and so do many other countries of the non-Western world, because they want to lower the exposure vis-a-vis the US dollar, and also the euro and the British pound are no longer in high demand. So gold is actually their safe haven. And having said that, I think gradually over this action in Shanghai will become increasingly important. At the moment, I think, however, that especially non-Western countries don't have a strong interest in seeing, a substantially higher gold price. I think they are still on the buying side, and they would love, of course, to buy gold at decent prices, not at record levels. And so, having said that, I don't think that the market forces coming from these regions will actually help propelling the price of gold upwards. I think the next drive will come from institutional and especially individual investors who actually realize that central banks, when interest rates will be cut, will try to reflate the currencies, will cause even higher inflation. Governments will build up even more debt, and the risk situation in the international financial system will increase. And I think this is actually the ultimate driver for a higher gold price.
That's brilliant. Let me leave the last word with you. Is there anything that I haven't asked you that you'd like to add before we close out our lovely chat?
Well, yeah, maybe we should have a final word on inflation. We had sky-high inflation just a couple of months ago. Now inflation is coming down. Well, there's a reason for that. at the start of 2020, central banks around the world, especially in the United States and Europe, increased the quantity of money big time. And for instance, the US central bank increased the money stock M2 by up to 40%. And 18 months later, you had this sky-high inflation. In the meantime, we talked about it, central banks have raised interest rates, not only in the US, but also in Europe. And what you can see now is that money supply is actually contracting. Money supply is contracting in the US. For instance, the money stock M2 fell by roughly 4% in a year on year in September. And this is putting downward pressure on inflation. It could actually usher in a relatively short period of consumer goods price deflation. Even house price deflation is possible in a situation where the money supply contracts. And also banks are running into trouble. Credit is contracting. And that refers actually to what I said earlier. These are the developments which I think are conducive to central banks lowering interest rates much, much earlier than most people expect. And again, this will be the development that is going to propel the price of gold much, much higher in the quarters to come.
Incredible. Thorsten Polleit, you're absolutely wonderful. I love all of your work. Folks, I will post Thorsten's English language YouTube channel link in here, and also a link to his best-selling global currency plot, which is just excellent. Also give Thorsten a follow on @ThorstenPolleit on Twitter. He tweets X.com now. He tweets, I don't even know if we call it that. We post things now on Twitter. Some excellent charts and graphs during the day that I find absolutely brilliant, and you will too. Thorsten, thank you so much for joining us today.
Thank you very much, Sean, for the invitation. Hope to speak to you soon. Have a great time.
Brilliant. You too. Everybody, thank you for spending time with us. I'll see you again next time. Ciao.